Hello friends, welcome back to the channel Wealth Guru. So today I'm back with another video on Ganesh Benzoplast. So this has been requested by some of our subscribers to make a video on this company. So I'm making a video on this company today. So Ganesh Benzoplast is a company in the chemical space which actually attracted a lot of inbound interest from different corners. So I thought of making a video on this as well. So before we start, if you are new to this channel, don't forget to subscribe to this channel because I come with new companies where you can invest every now and then, which has a lot of prospects in terms of its future growth and like price increase and other stuff. So don't forget to subscribe to the channel. So coming to this, Ganesh Benzoplast is a company in the chemical space which primarily produces the chemicals for food preservatives, lubricants and others, and it has primarily clients like HLL, Coca-Cola, and others. Also ONGC and IOCL also are its vendors, are its customers. So it has a pretty good customer base, and the product being in the chemical space is really exciting. So it's definitely a space to watch out for. So before we start, it's just to let you know this company has been in there for last 30 years, started in the year 1988. So this is a pretty old company, and being in the chemical space, it has really attracted a lot of inbound interest. So as you can see, it has moved from kind of a level of 38 last year around this time to somewhat around 70 plus. That means almost doubled in last 1 year. But if you look at things like the PE is still around 10, so there is a lot of growth potential left on this stock, as it is way below our target PE of 20 or less. So that is definitely better. It has a market cap of close to 450 crores. Price to book is 3.4, which is really good, and operating profit margin is 30.6%. That is also really exciting. So all these are positives, but let's do a really kind of a SWOT analysis to find out what the strength, weakness, opportunity and threats look like. And if you look at this, we have 7 strengths, 3 weaknesses and 3 opportunities. So starting with the strengths, there is growth in the quarterly net profit with increasing profit margin year on year on the stock. Company has a very low debt. That's really good for the stock. There is increasing revenue every quarter for the past 2 quarters. That's also a good sign. So during even this pandemic, this has increased its revenue for past 2 quarters. That's good news. The book value per share is also improving for the last 2 years. That's also good. Company has 0 promoter pledge. That's a positive for this company. FII and FPIs are increasing their shareholdings, so that's also good. And there is strong momentum. The price above the short, medium, and long-term moving averages. That is also good. So there are a lot of strengths the company has. Going to the weaknesses, there is inefficient use of shareholding fund. The ROE declining in the last 2 years. Promoters decreasing their shareholders. That's also a weakness. And there is declining net cash flow. So these are 3 weaknesses. What are the opportunities we have? The company is making profit with high ROC and low PE. There is highest recovery from the 52-week low. That's also opportunity. And RSI indicating price strengths. All these are good opportunities. There is no threats as such. So that's pretty much a SWOT analysis. And if you go into the technicals, as you can see, it has been above all its moving averages: 5, 10, 12, 20, 26, 50, 100 and 200 day moving averages. The stock is right now on above all these moving averages, and there is 15 bullish signal and 1 bearish signal. So that's indicative of a good bull signal on the stock. And finally, going into the shareholding pattern, the promoters hold around 43.14% share, public hold around 56.51% share. So pretty much 50-50 kind of both in the promoters and the public. And just to let you know, there is no promoter place of the shares. So all in all, this is probably, I should say, a chemicals company which is at around PE of 10, which is not seen up by within the many companies in the chemical space. So that's a good thing. And primarily it has a good customer base, as I said, like HLL, Coca-Cola, ONGC, IOCL, and many other companies in the food preservatives and the lubricant space really gives it a good customer base for the long term. So all this being said, definitely you can add on to the stock for a medium to long term position. In the short term, you may face some ups and downs as it has already moved almost 100% in last 1 year, but the long term perspective look good for this stock. Alright, so that's pretty much it for today, and if you like this video, give it a thumbs up, and if you're new to this channel, do not forget to subscribe to our channel and hit the bell icon so that we get every day a new video like this. Thanks a lot for watching.